what has changed with the Fed in terms of our ability to evaluate and think about what they should be doing? Because in light of the data, we definitely would have expected them to continue down the tightening path.
We would have expected them to have started their rate hike cycle earlier than they did, and at least forecast 1 to 2 hikes this year, maybe take a half-year pause. So for them to take all the hikes off the table, that was definitely surprising. The data hadn't gotten bad enough that that was warranted, in our view. But now they've set themselves up where they've set the bar so high to hike or to cut. The bar is extremely high. So they kind of have to walk this line where they continue to guide to 0 rate hikes. That is exactly what the market wants. Because if they start to hike again, we know how the stock market's going to react to that. Could be a replay of December. But then if they come out and say a cut is coming, I think that is because there are a lot of recession fears coming in early 2020. That's what the bond market is saying. If they come out and say, oh, we're actually going to cut rates, we think that could be the catalyst to sort of wake stock investors up. Say, wow, this bad data that's been coming in, this might be real. The Fed's saying this might be real.
Right, but it seems like nobody cares, right? All the bad data is coming in, and equity investors are still pouring money in. And these valuations are stretched, and the market's narrow, and we have all these signs of market tops that would sound off alarm bells historically, but nobody seems to care. So help me understand that.
Well, if you take "don't fight the Fed" too far, what can happen is you can be lobotomized by the Fed. So you just stop looking at fundamentals, stop caring about incoming data or earnings, and you just say, as long as the Fed's not hiking, I'm going to buy stocks. Both of these things are dangerous. You don't want to fight the Fed, but at the same time, you don't want to stop thinking and just buy stocks with your eyes closed. There's something in between there. And it seems like the market has more leaned on the side of, well, I've basically been lobotomized by the Fed. I mean, when that starts to happen, that's where you get a tech bubble type scenario. Things get crazy. They get absolutely wacky.
And we've seen signs of that, right? So maybe talk through some of the signs we've seen in the large cap growth space recently that are signals or indicators that we've gone too far.
So the Vanguard Growth ETF, which holds over 300 stocks and is one of the most widely held investment vehicles out there, they had to reclassify it as a non-diversified investment per SEC guidelines. And that's because it is so concentrated in those top 5 names. So there are 5 holdings in that index that each represent over 5% of assets. So, you're talking about Microsoft, Amazon, Apple, Google, those types of names. It is extremely top heavy. So that market narrowness, that once again, those are things you see when things get crazy.